Started. Okay, good morning, guys. Good morning. Happy to have you here. Hope we had a quite good weekend. And I hope we're all excited and looking forward to the opportunities in the week. Those of us with crypto portfolios, I hope we are staying safe out there, and I hope we're not having high blood pressure. The crypto markets took crazy hits last week, and well, billions of dollars were wiped off from the markets. Well, that's unfortunate. There's an entire reason for why that happened. Probably see that for a different time entirely. But you know, it happens. I'm looking to accumulate more in those right now. Anyway, but forex, the beauty of currency trading or trading this way is we don't really care. We can make money either way, price going up, price coming down. You know, opportunities are available in abundance in the market. So this week, we'll look at our weekly market outlook and opportunities that we could potentially be looking to explore. Remember, as usual, the majority of my opportunities I discuss in my client-only classes on Tuesdays and Wednesdays. And then this week, Friday, again, also I will be hitting a lot on our Forex EA creation. So we're going to be having classes of that, physical class in the office and also online classes on Fridays as well that you should be able to join and take part in. Remember, more advanced classes for you to go, to improve, to more or less go to the next level require you actually have to have a funded account. Okay, so with all that out of the way, remember this is not financial advice. There's anything given here are my ideas, and trading carries risk, so you want to ensure that you're using proper risk management in all your trades. Don't trade with money you cannot afford to lose, and stay safe while you're out there trading. Now remember, you could even trade safer while you, if you join me in my classes in the cutting edge trading room. Okay, let's jump straight in. Remember, like I always like to do, one of the first things I want to always do is look at the fundamentals for the week. Now, I don't treat fundamentals per se, but I always like to pay attention to it, know what could potentially move the market, know how to act or react to it, how to plan for it, and so that I avoid trading certain times, or probably look to lock in profits if I am already in them already. So quick one. Remember, if you have any particular instrument you want me to look at, I'll probably take about 2 or thereabout of them. You can put in your request in the chat feature. If they're not part of the ones that I will discuss, I'll take your questions or take those 2 or 3 much later, depending on how much time we have. Okay, so straight up to the fundamentals, you go to forexfactory.com, my news blog, either forexfactory.com or my FX book. So today, what I would like to always do is look at just the rundown for the week. Now, unlike last week, we have a little bit more busy week. Now, if you're wondering why my Forex outlook looks a little bit different, it's because I filtered out certain news report I don't want. So I don't pay attention to low impact news or no impact news. So you could use the filter option to deselect type of impacts, or so you can deselect certain news you don't want to see or the ones you want to see. But personally, I just deselect the no impact news like bank holidays and low impact news. Now, it's my preference. It's just in case when you open your FX book, your Forex Factory, you might see a lot more than me. But I just want to streamline what I'm paying attention to. Okay, so today not much. We just have the only one that stands out here is 3:15 p.m. The monetary policy report hearing. Now, this is not a news that comes out with an actual forecast and a preview. It's more of the report hearing, and it's going to be how the market perceives it. Now, it's going to be on the GBP pair, and it's basically, so if you want to see what it's involved, what the detail of the news, you could just come down here and say it's just Parliament and the Bank of England's governor and the MPC members would discuss on the monetary policy going forward. And during these hearings, there will be back and forth. It's just about how the market anticipate or take in the reports that is being given, whether being hawkish. So if they sound more hawkish than dovish, then we'll probably see a stronger pound. If they sound more dovish than hawkish, we'll probably see a weaker pound. The thing to pay attention to will be how they respond to the whole how they are going to respond to the effects of Russia, and their and their oil and gas sanctions and all, and Russia's refused to collect any payment except in ruble from non-friendly. So there are a lot of things that will be decided. Now, this one will just be how the market reacts to those news, and then we'll see how that one goes. And then on Tuesday it has a little bit more. There's going to be by 2:30 a.m. the AUD monetary policy meeting as well. And then there's also going to be medium impact news, the FOMC Goliath speak. So this would be, it would be one to watch, but I don't think it will have so much effect. It's going to be by 1:30 p.m. where we start seeing the core retail sales and the retail sales. The reports for this ones would more or less have some driving effect in the market. So if we see them come out better than expected, we could see a stronger dollar, possibly at least against most pairs. And if we see them come out weaker than expected, then if they come out weaker than expected, then we could see some really, really good moves. So we'll see how that one plays out, and also how the forward, how Powell comes out with that hawkish or dovish, and we'll see how the market reacts to it as well. So Tuesday is one high impact for the dollar. I'm sure that we're going to see some spikes in the dollar one way or the other. All we're doing is going to try and take advantage of this. And then on Wednesday, we also have the AUD, again, the weight price index, is just looking at the price index, QQ. And then we also have GBP, CPI reports, Canadian CPI reports, some low impact news. And then on Friday, we also have AUD. So the week is a little bit packed. No FOMC or no farm payroll or anything, but it's quite packed. And then we're going to see some movements in currencies, volatile movements, depending on how this outcome looks out. Now, personally, if you know me, I don't trade the news, but I pay attention to fundamentals to ensure. For example, let's say I'm in a position and I'm buying or selling AUDCAD or something, and we're having high impact news from the Aussie coming out. I would want to figure out what I want to probably, figure out what to do with that position. Or maybe I'm looking to enter a market and I'm like, okay, no, this is not the time to enter. Probably allow the news to settle down. If you trade the news yourself, we're good and fine, as long as you have a strategy and a system for doing that, good for you. But this is just how I look at it. And how I look at it doesn't necessarily mean it's the right way, it's just my way, okay? Now, with that out of the way, let's jump straight to the beauty of the charts, which is technicals. So I'm going to start up as usual by looking at the DXY. So the DXY is the dollar index that measures the strength of the dollar against the major baskets, right? So you know if you've been with me for a couple of weeks, you know my feel on this. The dollar is stretching even higher and higher, like I mentioned. Yeah, sure, I said we could be looking for a potential pullbacks, but don't try to call the tops, right? This is what happens a lot of the time where people feel. So this is one thing you learn if you join me in my classes, especially. So if you've not funded your account and you're not joining me in cutting edge trading room, you're doing yourself a disadvantage, because the truth is, retail would always lose money, and there's a reason why that happens. But you could learn how to trade the money in a smart concept way, smart money concept way, or learn how to approach the market in a way where you don't look at the market. You have to look at the market from a more fractal nature, right? So normally when the market is, you could see how the market has been bullish for a very long time. This is back in August last year. I said since I think it goes way beyond that. So let me even just scroll to the left a little. So you can see since back in June last year. So about May, so about a year now, the market has been extremely bullish. Now, what do you think retail were thinking? Now, this is the DXY, right? So we're not actually trading it. It's just showing, this is how the dollar itself has been strengthening. So when you look at euro dollar, pound dollar, dollar CAD, dollar Swiss, of them, you see the same type of correlation. But when price start moving in, upward, what is retail looking? They're looking at this, price is getting to resistance, it's going to fall. Price keep making highs, keep edging higher, keep stretching up each time. So somewhere like here, they look, oh, it has stopped. It needs to balance out. Yeah, it may look like it needs to balance out, but each time price keep making new highs. And just like I pointed last week, I said, well, I want to see, some reaction in price. And each time price feels like it comes down, it always pushes back up. So I'm figuring out how to treat the market in a fractal nature to avoid, and using proper risk management. This is key. So this is why you don't approach the market as if you know what the market to do. So people would, let's say, so this is what people would do, like, right? So let me just do this. Where is my replay? So let's look at this, right? So let's say this is live chats, right? Now, when the market is at this point, people are looking like, oh, this is aggressive. Let me even go back to be further. Now this is supposed to be market outlook class, but I'm here teaching you guys. Okay, well let's just do that. So let's look at something like this, right? So you should be able to see my screen. Now the market is bullish, making higher highs, aggressively coming back to the upside of this potential channel, and then what happens next is, well, the market decides to this market then makes the next candle, which looks something like this. Now, what do you think retail are thinking? Retail are looking at, oh, this is the end of the uptrend, this is the beginning of the downtrend. We are most likely looking to, they start looking to getting involved, selling probably back to this trend line, some even back down to some areas like this. Even some smart money, type trading system will be looking to jump on board at every movement. Now, usually what happens is, well, the power that bees would kind of range the market and figure out where liquidity is, so where you find that. So if most people are buying, usually price will tend to go down, and most people tend to be selling, at least most retail, price will tend to go up. And what happened is, well, the price would do what it, people start getting excited to get involved, and then price start making its move. It seems like, okay, it's going back to a test, it's a double top, it comes back down, oh, it's a double bottom, it's a channel, it's ranging. And then people start getting excited and start getting involved buying. And what happened is, well, the market would just break to the opposite side of where, where you're expecting. So a lot of people would have gotten liquidated here. And then some people who don't use stop loss would, would have a sell here. And then they think, okay, it's going up, they'll have another sell here, it's going to come down, it has to come down, and maybe they'll have another sell here. Assuming they know what the price will do, well, price will do what it wants to do and just keep tearing out, right? Until you have margin call and then you blown accounts. Now, why did you do all of that? Well, it's simply because you were, you were assuming you know what the price will do without actually looking at what the market is doing. Now, if you take a step back, you would have figured out there's actually no reason to be shorting this pair, right? Even back here, so this is most recent price. So even back here, when price made this aggressive move down, there's no reason to be selling, right? If you understand, if you join me in my classes and the way I look to trade, you know that we like to look for confirmation, right? So we want to see structural shift, and also I'm not going to go into all of that here. I'll explain more of that in my classes. So join me for those as well. But there's no confirmation here for us to start looking to go in long. And even if you are, you understand that you should understand that you're trading against the trend, and you should never actually have to be trading without using proper risk management and without a stop loss as well, right? So anyway, back to base, we are currently at this point, and well, the path of least resistance for price is actually to continue to go higher. Now, I know it looks like it might start dropping, but the part of least resistance is for price to actually continue to go higher, unless we start seeing price take out lows, and then we could actually start looking for sales. Now, but that notwithstanding, we also have to understand that some part of our job as technical traders is actually to kind of analyze price and figure and try, and sometimes, there are certain times where, you might look to get it a little bit early and try and, especially when the technicals is pointing to a particular direction as well. So now, a good look at that would be EURUSD. So EURUSD, let's jump to EURUSD. You can see EURUSD is inversely correlated to the DXY. The DXY is appreciating, that means a stronger dollar. The EURUSD will be depreciating, showing also a stronger dollar as well. Now, this area highlighted, I've drawn out these levels on my chart for a while, seeing how, looking to expect some sort of reaction from here. And you could see how price has, aggressively been dropping. Also, since back in June, just as we saw in the DXY, price has been dropping aggressively, a very steep trend line, each time getting steeper and steeper. Now, however, just even though we understand that the part of this resistance is for price to actually continue to go down, we also understand that no trend lasts forever. So what we can be looking for is, yes, I am looking for opportunities to sell, but I'm also looking for confirmation to actually start buying. If you are in the Telegram group, I posted something on EURUSD on Friday concerning the potential setup for a break higher. Now, from where we are in price, it actually seems quite plausible that we could start to see some potential shift. Now, the potential shift doesn't mean that we will now see an all-time bull market. It could just be a shift where price goes in bullish for a while, only to then continue bearish, right? But either way, we can take advantage of such opportunity and then take advantage of the next, because that's what our job is. Now, so for EURUSD, I like where we are bouncing up from. I like the fact that we have stayed above this level. And I like to look for opportunities to buy, but I want some sort of confirmation and then for some reason to enter. Now, if we go to the 4-hour charts here, you'd see what I had in mind. Now, first of all, there are a number of things to point out. First of all, the market is overstretched, but that doesn't really mean jack. Next off, I like this sort of Wyckovian structure here. It looks more like an accumulation, right? Although it's still quite small and still in the early days. And then this could potentially be the spring, right? So this could potentially be the spring where the market then comes down, clear all the liquidity that rests below here, only to go higher. But for that to be the case, we actually need to start seeing some confirmation, bullish confirmation in price in the form of structural shifts, in the form of trend line breaks, in the form of displacements to the upside. So right now, I am looking for opportunities waiting for opportunities to participate buying. My EA is picking up some few buy trades already, but I am looking for opportunities to participate buying. But I would like to see a break above this trend line. So you can see how we had multiple touches here. Now, even though it seems far off, that is more or less a strong inclination for me to want to see opportunities to buy, right? So at least to really get involved buying. Now, I do have some small buy positions. I'll show you just in a minute. I took a few positions this morning, just a few small positions. You could see how the market was ranging just above. So we had this, notice this, we had this push higher, right? Then we had a break downwards. So we had a break of structure. We tested and then we closed that movement. However, this low down here just looks like a liquidity grab to me, right? Now, with doing that, we then proceed to aggressively push higher. Now, this looks like an SO, a spring, if you do understand what I call, it looks like a spring. And then we had this more like, it looks like an accumulation schematics on the 15-minute time frame. And so I was watching for a break above this high. So this is the 15-minute chart, so it's a short scalp. I was waiting for a break above this high, which occurred here. And after that break, I look to participate buying a first target here, and I'm looking to drill the rest. Now, so personally, so let's go to the 5-minute chart to see this clearly here. So when we had this break above here, this was like around 8 thereabout this morning. I started looking for opportunities to look for buys, and price came back, tapped exactly into where I was looking for. I had a buy position here. I took out first partial here. That's why you see I have this here. Some part of the trade is still open. So my first partial is here. Not much, just about, I think, 12 pips or thereabout. So my partial, I took out 50% of my position because it's short scalp. My stop loss is now at break even. So there's no risk on this trade whatsoever. If price comes down and taps into it, well, I close at break even. I have taking some profit here. Now, I like the way price is delivering. So what you can watch for now, remember, this is a 5-minute chart, or the whole analysis on the 15-minute chart. So even though this could be the start of an uptrend, we don't know that yet. Right? So this is the reason why I trade the way I do. This is how I capture the beginning of moves without, with very little risk. So let's say this was the best place to enter. If you missed that, what you could probably be looking for here is wait for a break above this, this level. So if we have price, as it come back, break above this level, then you could potentially be looking for, so let me show this. So this would be, you could wait for a break above this level. Now this is the 5-minute chart, I think 5-minute chart. So remember, high probability of getting wiped out, not wiped out, but getting displaced more or less. However, the risk, the amount of pips at risk is actually quite small. Now, this will be our protected low, more or less. That means price shouldn't be going below this low, right? So this should be our protected low, and this should be our highs that we want to see price displace. Now, if we get that displacement, that means if we see market do something like this. Now, remember, the reason I'm not aggressively jumping on looking for buys, I'm just looking for, okay, let me explain. So if you go to the 1 hour chart here, now you can see how this market, since breaking this low here, aggressively moved down. Usually the market likes to balance out. You could see how we had price pockets here. We also have this last up move before the down move. So there's a good chance, right? There's a good chance price wants to at least come back up here before going down. This is the reason why the confirmation I want to see for a long-term bullish move is to see price break above the trend line, right? However, knowing that if price actually wants to come back up to this point, I can take advantage of that move, and that move could actually be the start of this move, or it could actually be the continuation of the down move. So here will be a decision period for me, whether I start looking for sales or maybe I start waiting for breaks to the upside. Now, which is why I'm waiting to see if I can take advantage of this. But remember, this move here is counter trend, meaning the likelihood of price is actually to go down even further. Okay, I don't know if I'm making sense. Now, so this should be like, let me say, overall target. Now, doesn't if the price continues to move, I really have my prices set at high areas. It just means at this area here, I'll probably, so I collected partial profit already. When price come back here, I'll be looking to take in some more profits, lock in some more profit. I don't move my stop loss. My stop loss will still stay at break even. Okay, so that being said, if we now go back to what was that 5-minute chart, this was the at least the way I like to trade. This was the best place to enter. I got in there luckily. Actually, I got in a little because of spread. I got in a little bit worse than there, so something like that. Now, but for now, you want to wait for the candles, the markets to break above this high. If the markets were to take out this high, that would be a good sign. So if price were to take out that high, then you could now be waiting for a retracement, maybe into the 61.8 or the 78.6. and then look to buy, keep your stop loss just below the protected low. So you could see your stop loss will be, your risk will be very small. Your first target should be the high. So sometimes it feels like I feel like I'm talking too fast. Okay, so no calls now, please. So let me explain myself properly. Okay, so sorry about that. Now, so basically what I'm looking for, at least if you, I'm actually looking for this. So if price were to break above this high before taking out this low, and then I'll start looking for opportunities to buy if we start coming back into this zone. So this would be, possibly where you could now start looking for buy opportunities. Let me do this like this. You can now start looking for buy opportunities from, let's say, the 618. Keep your stop loss just below this low, give it some gap because of spread, and you could target higher prices. But then at this point, you would want to be looking to take partials. You want to look to take partial profits out of the market because it's very important to take partials. This is something I'd rather be, when I'm right, I want to be very right. And when I'm wrong, I want to be a little bit wrong. So if price, because remember, the part of this resistance is for price to continue to go down. So if price were to from here and come up like this, I want to at least have collected some profits, move my stop loss to break even, and then, probably wait for the next move. I don't necessarily have to, but price could just continue to move, in which case I'll look to take profit higher. Now, sometimes price will not deliver how you expect. So let's say, for example, which is, this is what you have to understand when it comes to trading. Price might come back. Let me delete this. So, the market may actually break this area. We might start looking for opportunities to buy from here, and the market doesn't really move back down. That's fine. Don't chase the market. Wait for the market to deliver to you and then trade it, right? So any trade you're trading here, keep your risk small. Remember, we're trading against the trend, right? We're trading against the trend. Now, there's a far bigger reason why I'm actually looking for some scalping buy opportunities in this pair, even though we are constructively bearish, right? So if you look at the daily chart, right? So if you look at the daily chart here, you notice something. Now, this is our momentum oscillator, kind of like, so when I'm watching for divergence in price, I want to see discrepancies between price and momentum. Now, notice this. You can see how price is making a lower low, right? You can see this is the previous low, right? So this is the previous low, and this is the most recent low, right? However, and also notice that price is just coming out from being oversold. You know, we're still actually sitting in oversold territory, right? But notice what momentum is doing. We are actually making higher lows, right? So price is making higher lows, momentum is posting lower lows. So what it means is when there is discrepancy between price and momentum, which is called divergence, we tend to see price move in the opposite direction of where it has been moving. At least either it's a corrective wave or it is a change in trend entirely. You know, you would see examples of it all over the place. But here's the thing that, just like I always teach about divergence, is price doesn't necessarily, you need to wait for some sort of confirmation, because just because market is divergent doesn't mean the price would immediately start moving, right? So you could see an example here, see price making lower lows, see momentum making higher lows. We are coming out from being oversold, you know, also here being oversold, and price moved up, right? You'd see that over and over again. Sometimes in this particular instance, it happened, you know, after being oversold and making divergence, the price just shoot up, right? Sometimes it would happen, you would find a divergence market, and the market may move down a little bit slightly before going up, right? So this is the reason why you want to wait for confirmation. Personally, I like to see trend line breaks, right? So I like to wait for trend line breaks as confirmation in price to then serve as reasons. You can see that here again, market making lower lows, price momentum making higher lows, price coming out from being oversold, and the market moved up, right? And over and over and over again. See the same thing here again, markets making lower lows, momentum showing higher lows. We're coming out from being oversold, we tapped into oversold region again, and price moved up, right? So now there's no guarantee that this is the same thing that would happen, which is why you want to watch for confirmation. And even with confirmation, the price may still maybe break above the trend line and then start going down. This is the reason why you don't go and say, okay, because Mr. Bina said this is going up, divergence has played out, that's confirmed, you know, carry the most aggressive lot size. Don't place a trade if you cannot afford to bear the loss, right? Now that's on EURUSD. I showed you short-term opportunity. I also showed you long-term opportunity. Now remember, I will be discussing those long-term opportunities to you guys on my trading room as they develop, and I'll be showing you how I'm looking to trade them, when I'm looking to enter, and all of those fancy stuffs. Okay, so next step, let's go to AUDCAD. So AUDCAD is also the next instrument I would like to discuss. We'll spend all of our time trading, looking at EURUSD. Well, so AUDCAD, what was I looking for here? When I gave out this one, daily chart. So who traded this with me? I think I talked about this one last week. If you go to the 1 hour charts, I talked about this last week. Yeah, I think whether on the client only group, or I don't know whether I also discussed it on Monday, I can't remember. But remember, I highlighted I was looking for opportunities. So price was breaking out of this trend line. And I said, I expect price to come back either here or here. And I was looking for sell opportunities to take price lower. And it was a beautiful trade because I got in on a buy. I got in on a buy here and took out profits here, got in on the sell there, and I'm still actually riding this one. I still have some open position on this one. So you can see how price came, beautifully tapped into our zone and dropped down. Now this one, I wasn't able to get in at the best possible price. I think I got in somewhere around here. Now I didn't just start selling. I got in on a much smaller time frame with my own trading idea, my own trading principles. Right, but price tapped into exactly what I was interested in. I wanted price to relax a little bit here and then look to sell, right? But price tapped into it, aggressively pushed down. I then looked for opportunities to sell from around here, I think, and then I'm still riding down. I have closed partial profits. I think I closed another partial. My stop losses are break even, so there's nothing to to lose on this one. Now, I was also looking for opportunity to get back in selling. Now this particular trade idea, I think I gave it out to the, okay, so I'm not supposed to, let me just show you guys the Telegram group. Let's see. Okay, so I think this was this morning. So this is AUDCAD. Yeah, so this was this morning. It was like around 8:12. So 12 minutes after 8, I gave out this idea, looking for opportunities to sell around this red zone. That was it here. So waiting for price to come back into here, look for sales to take it down and probably further down. So very still valid setup. This is for clients only, but well, you're getting it. Good for you. Now, here's the idea behind that. So if you go to the 15-minute chart here, you see that I'm still waiting for this trade, right? I am still waiting for this trade. If it doesn't give me a trade, well, no problem. You could see, okay. Now you could see the whole idea. We broke down below structure here. I'm waiting to see price come back into this zone to form highs to low and see if we can get back into yeah. So looking to sell from the 618 and this particular instance for my own personal reason. I'll give out that to everybody. Now, don't worry, you can get that when you join me on my classes. I want to sell. My first target is down here, right? Now I have much lower targets, but that is my first target. You can see my risk to reward ratio is, this is how I like to trade. My risk to reward ratio is about 1:4. So if, in which case I'm risking 8 pips to try and make 38, at least 35. Remember, I always look to manage. I told you guys how I manage my trades in the client only group as well. So don't worry. Now, I like this one. I like the fact that we are ranging here, right? And I still like the fact, I still like where price is. We're still within this structure. So I want to see if we could potentially get up to this zone. And then I want to wait for, I would watch for confirmation on, let's say, on the 5-minute chart, the 1-minute chart, I don't know. But once price gets into this zone here, this red zone here, I would be looking for sell opportunity, break of structures lower, then to look to start selling. Now you can place a pending order here, place your stop loss here. The risk is just 8 pips. So definitely you want to use proper risk management, obviously, but the gap difference is not much. So if you're wrong, this is how I like to do it. When I'm wrong, I want to be wrong and get out of the market. I don't want to sit down and be holding losses. When I'm right, I want to be really right? So if I'm wrong, I don't have a pending order for this one. I want to see price tap into here, but sure, I could easily have a pending order and then look to sell this down. So this would be my first target. My second target would be much lower. Let's see. Let's start the daily chart. Sorry. Let's start this. So if you zoom out, you'd see that, well, there's really no big second targets. Usually when the market forms liquidity like this, it usually tends to like to run it. So there's a good chance that we might take out this low. It could hold, but there's a good chance that we might take out this low, at least based on price delivery up until this point. The only thing that worries me a little bit might be the fact that we are aggressively pushing into support. When price aggressively push into support or resistance, in most cases, it tends to bounce away. When the market gracefully approaches level, it tends to break it, right? So that might be the only thing that I see here. But besides that, this is liquidity. Price might want to run it a little bit and then move higher. However, our trade still stands. At least the trade idea is still very valid because we are still constructively bearish. The tap into this zone could offer selling opportunities to at least take this back down, make a quick 35 pips, or be wrong for 8 pips, not the worst of risk to reward, and then move on with that. Actually, today I don't have so many trades idea I want to share out for everybody here. Tomorrow we'll be talking about we'll be looking at all the instruments together, and I'll be explaining, we'll be breaking down how we probably be looking to approach it and how I'll be looking to trade them. Okay, so now I'll quickly take so I'll take about two. So this is about 555, 1155. I'll take about two instruments, one or two instruments depending on the time. If you want me to analyze any particular market for you, let me know. We spent all our time on EURUSD and also on AUDCAD. This one could play out anytime soon. When you make money, remember to sell my shares. Okay. So any questions? Any particular pair you want me to look at? Okay, I think I have one question. Gold. Gold diggers. Okay, gold. So let's look at gold. Remember, yeah, gold was a nice one because just exactly how I did not trade it anyway. So it wasn't nice like I traded it, but I didn't trade it. So gold was, let's clear this out. Okay, this is the one they just. Gold was, so like I mentioned, right? Unfortunately, I didn't get to the trade, but price delivered how we were looking out for. Now, when I started talking about gold, price was still way around here. And I was saying, well, we're looking at a very key level, this trend line here. If we were to bounce away from this trend line, and at the time, I think when we had the second class, price was making this bullish candle. And I said, wait, that is not a reason to start buying. I'm actually still looking for a reason to sell because of how price is moving. But I wanted to see price come up to this area, then look for a reason to sell and go back down. Where price didn't come up to where I was looking for, but price actually broke to the direction we were, we started expecting. So if you go to the 4-hour chart here, so 240. If you go to the 4-hour chart here, you'd see what it is that we're actually looking for. I'm a very big fan of trading gold. I think I have gold phobia from my early days in trading. Lost a lot of money to gold. So anytime I'm trading gold, it has to be, I have to love this. I have to love the setup. I have to love it, the bones. Well, that's by the way. However, I'm looking at it now, right? I know most people will still be looking at this and feeling, okay, so this is no longer looking at. So most people are looking at this and feeling that price needs to go up. But price doesn't need to do anything. This is how most people might be looking at this. And while there's a 50% chance they can be right because it's just a 50% chance, people are looking at this and saying we're just bouncing off from support. Well, to me, this is just liquidity grab. Even if we were to push back up, there's a bigger chance we come back down and clear this area than we break up. Because right now, the market is tanking. Every sector, every asset class that is more or less like a safe haven, whether it's BTC, whether it's cryptos, whether it's gold, even stocks, everything seems to be on the slide. And I don't think it's the end. I still, personally, I still feel there is a much bigger liquidity target down here that the price might actually want to run to. And so, well, looking at this, the market is bearish. We're clearly in a bearish market. We're in a bearish setup. So let's look at what the immediate price is telling us. You can, we can just draw this like this. No, I don't like that. That will be the outer trend line. So let's pick the inner one, something like this. So we have this in mind. So instead of looking for opportunities to buy, I'm probably looking for opportunities to probably sell. Right now, doesn't necessarily mean I'm trading gold. But if I were looking to trade this, I'll be looking to sell maybe on the backside of this trend line. If we break above the trend line, I wouldn't really be looking for buys because the resistance is just up ahead. There's also another key level here. So if anything, if you want to, either wait for a break of this trend line, then you could look to scalp this back up and then look to sell, or price could come in here and reject it and you could look to sell this. If price fails to go above this daily trend line, which I fear it shouldn't go up. I don't think price is going to go back up there. And even if it does, I don't expect price to break it. Or well, what do I know? Any push upwards for me is more of a selling opportunity than an attraction to buy, right? At least that's the way I'll be looking at gold. So for now, the liquidity is this current low, because what do you think everybody is thinking? Oh, everybody is thinking, oh, we are now at support. You know, this is support. You could see this is support. You know, that was the last major move. But most likely, well, more likely than not, price could potentially just range a little bit here and then break it and continue to go down. I feel, you know, this is where probably buyers will come out and step in a little bit. But since, like I mentioned the last time, if we break above this trend line, we're most likely going to see all this liquidity run. And that's where we are now. So if anything, I'll look for selling opportunities to go down, right? I'm sure that's probably not what you're expecting to hear me say, but well, that is what I'll be looking out for if I'm looking to trade gold. So for the day, let's even look at smaller time frame. It's just where we are now. So we're just still clearly making lower lows and lower highs. This is the most recent. This is the most recent swing. And if you just pull up your feed from high to low, maybe sell to 78.6, maybe half of it. And this could be a better trade. I don't think, I'm not saying I'm taking it, but if I were looking for anything, this is probably what I'll be looking to do. Sell, right? I know everybody's looking at this and trying to buy, but not me. The only time I might want to look to buy is if we start, you know, if we break above this highs and maybe this high, then maybe I could look to buy. But for now, the part of this resistance is downward, and more likely than not, we tap in here and we drop, you know, come down, take out this low. Okay, so that'll be it for me on gold. I think I have time to take just one more. Let's take it to 12:05. Any last anybody has any particular instrument you want me to look at quickly before we call it a wrap? Okay, so it seems no question. Anyway, I hope we all enjoyed the class. I hope you're able to pick up something. I hope I'll see you in my class tomorrow, and subsequently, I'll make sure you join me for the EA class on Friday, either physically in the office or okay, I didn't see that. Okay, GBP JPY. Okay. So GBP JPY. I don't know why I'm having this go. Sorry. Okay. Let me see. You see? Look at me. Right. So this one is you don't even need anybody to say anything. This was analysis I had. This is an area I'm looking to buy from. And what has happened? Prices are just coming and bounced away. So this happens a lot where I'm very wrong. I'm very, very correct in my analysis, but I don't trade it because I'm too busy doing 1001 things. But yeah, I don't think this one needs so much explanation. I think I also talked about this one some time ago, and which is actually why I have these illustrations on my chart. I was looking to buy from this area or this area, and so far, well, price is bouncing away. Now, here's the thing about the way I like to trade. Even if price bounced away and come back down, I would have made a very good amount of profits trading that move, right? Because of the way I get into positions, right? And then let's say price breaks down and then breaks up and break down. That move alone would have been enough for me to get into good position. But so far for this one, here's what I'll be looking out for right now. If I'm not already participating in this, like I'm not, you could potentially be looking, let me see. No, we're not divergent, we are not oversold, so that's not something to watch. So let's look at the forward chart. And let's see how many pips this could have been. This is wow, that's about 292 pips, that's about 300 pips. Oh, that I left on the table. Okay, well, shit happens. So let's see. Right now, you need to understand something, right? So at least the way I like to look at the market. So let me look at the weekly chart first, right? We are in the bullish market, long term. You could see it, weekly charts, daily charts. We are in a bullish market, right? Now, however, within the most recent smaller time frame, at least this area here is what I'm referring to. This area here, within this red zone here, if you look at the 1 hour chart, you would see that we are constructively bearish. So this is a market within a structure within a structure. So if this one would actually go, where is my 1 hour chart? Okay. Can you guys hear me? Okay. So looking at the 1 hour chart here, from this high, oh yes, okay. So this is the 1 hour chart. It looks a little bit choppy here. I'm sure if you look at it on the 4 hour chart, but this one is taking forever. The 4 hour chart load fast. Okay, so you will see that since making this highs here, what price has been doing is lower lows, lower highs, lower lows, lower highs, and lower low. So at least based on this 4 hour chart, this is the most recent lower high that needs to be run to continue to move higher. However, that is very, very far off. So now if we look within this same trend and look at, let's say, the 1 hour charts like we were, and look within the 1 hour charts, you would see that we seem to have started to shift bullish, at least on that time frame. But remember, you still need to pay in mind this trend line, right? So you could see now, price is making lower lows, lower highs, lower lows, lower highs, lower lows. Now, since making this low here, this low down here, you can see how price is now making a higher high, a higher low, and a new higher high. So more likely than not, we are looking constructively bullish. So right now, what you could be looking out for if you fail to get in on the trade here, or you fail to get on the trade here, would be to wait for a break above and a retracement back down, look to buy, keep your stop loss low, targets this high and even further highs. Okay, so for a more conservative, safer, more or less approach, wait for a break above this trend line, at least 4 hour candle close above this trend line. Better still, a daily candle close above that area. Look to buy and take price higher, because remember, any buy I get in on, let's say I'm going to actually keep this on my watch list. If let's say I get in on the position and price, I get on a very good position and price starts to, I look for a buy. Let's say something like here. Let's say price breaks out, right? And then I get in on the buy, something like this. Well, even though I'll be targeting lower, inside structural highs, this is really like my main targets. That there will be like 1,000 pips targets long term, but I need solid confirmation to trade this. It would have been lovely if I was watching this, but I wasn't. I would definitely have gotten on the buy somewhere around here, and I'll just be holding that one to something like this. But I would have already taken some partials, probably move my stop loss to break even, and just see if I can ride the rest of the trend. Okay, so I'm what you will call I don't even know what, scalper swing, whatever. I look for intrinsic time frame to get in, or I could hold trades for a ridiculous number of time, just like those of you who know, I saw some of you who are here remember my GBP NZD exploits, also my USD JPY exploit. I've been holding that trade for more than a year, right? So, GBP NZD daily charts. You remember this trade? This is one of my best performing trades for the year. I think GBP NZD and GBP USD, which I got in selling just around here, and I held all of that position. I closed all my profit down here, and I started looking for some buys. I got in on some buys. Now I'm looking for sales. I need to try to dip into this area and look for sales to take this down, right? Same thing with USD JPY. So USD JPY, this one is ridiculous. I've been holding this one for I don't know how long. Now the trade left open is something like 0.02, I think 0.03 or thereabouts, but 0.03 is worth hundreds of dollars because this is back in something like March, April. Sure, I've been trading intra, looking for some other buys, but I had trades from down here and I've not closed them. I probably wouldn't close them. My stop loss is still down here at break even. I'll start looking to close them if I start to see structural shift to break of structure lower, and then maybe I may start looking for buy opportunity, sell opportunity, sorry, to take this lower. So that's how I get into those kind of big swings. Now those on my own personal private account. But for now, just like this one, the market is still bullish and everybody is expecting price to tank. But the market, as far as I'm concerned, is still bullish until it starts saying otherwise, right? I'm not going to discuss this one here. I'm going to discuss this one with you guys on the cutting edge class tomorrow and next. Okay. So thank you everybody for joining in. I hope you enjoyed the class. If you're watching this from the YouTube channel, please remember to like and leave a comment. Also, do subscribe to the channel. I hope everybody here is. Please subscribe to my YouTube channel. So I'll be posting this. I'll be updating this video on the YouTube channel just after this. Once we're done, let me